Hello ladies and gentlemen, in today's video I'm basically going to be explaining difference between A plus setups using the inversion for value gap model. This will be a part of a playlist where I go over certain parts of the inversion for value gap so you guys can learn how to trade this strategy for free. In today's video I'm just going to explain what inversion for value gaps to look for and what certain criteria that needs to be met for a setup to be A plus. So for example, we're gonna get straight into this. For an A plus setup of an inversion for value gap, we need to have a couple things. First of all, we need to have a good draw on liquidity, right? So good draw on liquidity includes unfilled fair value gaps, so unfilled, unmitigated 15-minute fair value gaps, unmitigated fives, and other different types, other time frame fair value gaps. Low resistance liquidity, data wicks, equal highs, equal lows. I'm going to go more into detail in the draw on liquidity, specifically with examples in a different video and for the My Strategy playlist, but just for now, just make sure to write down those things. Again, unmitigated gaps, equal highs, equal lows, data wicks, low resistance liquidity, and even intermediate term highs / lows. So we also need, so we have draw on liquidity. So I'll write this down. We have draw on liquidity. You need delivery from a fair value gap. So fair value gap delivery. Then you also need a liquidity sweep, as well as you need to be in discount / premium. Discount / premium. Okay, so let's go into these things so you guys can identify an A plus inversion for value gap setup. So here's a setup that we had Monday, 29 September 2025 at 322 or 320 was the entry. This inversion for value gap, let's see if this is an A plus setup, right? So first thing we need to identify, draw on liquidity. Okay, what am I targeting? So if we go back here, we can see what types of draw on liquidities do we have. Okay, let's look. We have intermediate term highs. Okay. We also, if you see up here, we have triple equal highs. So I have an indicator, free indicator. I have no I'm not sponsored or anything by this, but equal highs and lows out of options indicator. If you search this up on TradingView, you can click on this and it'll show you equal highs and equal lows. So you can see on this green line right here, we have triple equal highs. So triple equal highs in the market, especially on the 1 minute time frame or more, are pretty substantial. Now this is a pretty late trade, so I don't think we go hit these, but considering it's already 324, but this is the idea of the trade. Is like this would be your final take profit, right? So we have a good draw on liquidity. Okay, so that's in check. We also have, let's see, we put in a unfilled 15-minute for value gap here. So we have an unfilled 15-minute for value gap. So that's another good draw on liquidity, right? Price wants to do two things: seek out inefficiencies as well as seek out liquidity, right? So now we have an unfilled 15-minute for value gap here. So that's a good draw on liquidity, as well as, let me bring this back. So I think that's it actually. So yeah, pretty good draw on liquidities here. Definitely decent enough to take a trade. So actually, I'm gonna add in one more thing: momentum. Momentum is definitely a big factor in looking for inversion for value gap trades that are A plus. But let's move on to the second thing. So fair value gap. So fair value gap delivery, right? Fair value gap delivery. What is that? What do I mean by that? When price comes down, we want to be, when we're especially taking reversals. So inversion for value gaps are either reversal patterns or you're taking continuation. So let's say we have a reversal and then you look for a continuation, maybe like tap into a PD array and then get an inversion off of that, right? So that's a continuation. This right here is a reversal. So we want to find for value gap delivery. So how do we do that? Usually you want to go to the higher time frame and see where we are. Okay. If I go to the 4 hour, I can see what did we tap into? We tapped into a 4 hour BISI, right? So 4 hour fair value gap. So we have delivery out of a fair value gap. Okay, so that's a criteria met. The next thing we need is a liquidity sweep. So let's find a liquidity sweep that's prominent. Maybe some low or high, maybe on the 15-minute time frame. So we do have a liquidity sweep here, as well as we can use a low somewhere here. Right, so here we have a prominent swing low on the 50-minute time frame. You see how we sweep out this liquidity down here? So now we swept liquidity. Okay, so we have met, let's see, 1, 2, 3. 3 out of our 5 criteria so far. So this is looking pretty good for a setup, right? So we have a sweep of liquidity. We have that 4 hour fair value gap delivery, right? So this can be our turtle soup. And then down here, we're gonna have our 4 hour, so 4 hour fair value gap delivery. It can be any time frame delivery. Usually you don't use 30-second, but like 1 minute delivery, right? It can be any type of time frame for value gap delivery. It doesn't have to be 4 hour. Same with the liquidity sweep. The liquidity sweep just needs to be a prominent low, something that stands out, not just any random low. For example, if you're just sweeping out like this low and you're like high in premium, I don't expect some inversion up here to work unless the draw on liquidity is again really good. But so we have a prominent liquidity sweep, we have good delivery out of a fair value gap. So next we need discount / premium. Okay, so if we go to the higher time frame, let's go to this 50-minute. Discount / premium is a little tricky in this range, but what I would use, I'd probably use somewhere around, so this swing low to this swing high. You can see this is the 50%. So this middle line is our discount. So below here is discount, above here is premium. Yeah, so I would use it of like here. Technically of this entire range, you would use it down here, but in this case scenario, I wouldn't marry 50% down here, because then at that point you're violating a 4 hour fair value gap, and then price is probably not bullish. So I'm going to use it from this range, from this swing low to this swing high, which is a prominent 30-minute swing high, swing low, and then all the way back up, right? So here we're below this 50% level. That means now we are in discount. So if I want to be longing inversion for value gaps, or any long in general, the best longs are going to be coming from the discounted range and not the premium. So if we take, let me actually go back and show that. If we look back at the 50%, right, take this range, draw out the 50%. I'll make this purple so you guys can see. Or sorry, not that. This line, which is our 50%, make this purple, right? Therefore, what I want to see price come down into discounted range and get a long. I don't want to be taking longs up here because that's in premium of the range, right? I want to be in discount. So here we are in discount of the range. Okay, cool. So now we have 4 out of 5. The next thing is momentum. When looking at an inversion for value gap, momentum is a little subjective, right? There's a couple ways that you can identify. Obviously, the best way to identify is just you look for that V-shaped pattern. Okay, cool. We get a pretty much almost a 3-candle pattern, but this is like 4, 5, so 6 candles here, but pretty much a V-shaped pattern off a liquidity sweep, off delivery out of fair value gap, right? All of that combined, you get a really nice V-shaped recovery. This to me is enough momentum. You can see these candles. These candles are strong body. They're not weak, right? So what I don't want to see, like let's say, take this for example. Let's say we get a leg, right? Same thing here, same just like this. But now we start to chop, and we close like this. Not a very strong body, kind of weak, right? You can see the difference between this and then here. This is strong body close, and this I expect more upside to then reach out these draw liquidities up here, right? What I don't want to see again is just chop through it. So there needs to be enough momentum for the trade to then play out, right? If we're chopping through the inverse, I don't like that. Now there is an exception to this. If price here, right, same scenario. If price, we have an inversion for value, or sorry, we have a fair value gap here, right? If price starts to chop through this, but then at sudden moment we get a huge momentum candle, right? Maybe like a 15-20 point candle that's like really spiking through the inversion that shows momentum, showing we want to go for upside, then that's fine. You can still take the trade. But if we really just chop through the inverse, not with a lot of momentum, then do not take the trade, right? So momentum needs to be there for this to be an A+ setup. Okay, so now we have all 5 criteria met. We have singular, so singular for value gap, right? We have drawn liquidity, right? We identified we had unfilled 15-minute above. We have triple equal highs above. For value gap delivery, we tapped into that 4-hour liquidity sweep. Again, we swept out that 15-minute, remember we swept out that 15-minute low here. So we have a liquidity sweep. Discount premium, right? We're below the purple line as I drew discount on premium. Even of this range, if you take this range, we're in discount. From this swing high to this swing low, we're in discount, right? And then lastly, momentum. Momentum here is really, really good. Strong body candles. And even on this close, on this 2-minute will actually be the entry. You can see we put this 1-minute order block in, which is a really good sign. So now let's take our trade. So we have all of our criteria met. Their entry is going to be basically this close. So we close above these 2-minute fair value gaps, right? So here. If the fair value gaps are not singular, you can just take them in like succession. So like these are, we have 1 2-minute, one and another 2-minute here. If you break both of these with momentum, then you can just take it like this, or you look for a higher time frame fair value gap that's singular. If I go to a 3-minute, there's no fair value gap. So the 2 minutes is the highest time frame that we have. So I take an entry here, right? So you'd be getting in there. Stop loss for me, either you can use a close below on the inversion, right? So if we close back below the inversion, including inception gaps. What are inception gaps? They're fair value gaps that could get retraced to in the inversion. So this 1 minute could be an inception gap. So make sure to include your stop loss. Make sure to include this inception gap in your stop loss, because price could technically retrace into it. It could close below the 2-minute inversion, right? It could technically close below this inversion, but if this gap holds, then price is not flip bearish. Then we could reject out of that. So make sure to keep that in mind. But basically, you're then taking this long. I personally use a hard stop, but I have a hard stop in an area where I expect price not to reach unless the trade is just completely wrong. So I would put a stop here, hard stop there, and then I want to target opposing liquidity. Right, so intermediate term high, I'm going to be looking here is a good target. Obviously that's negative RR, so I would not scale there. I'd probably scale it this high. And then my break even point would be the next internal high, which is this high. And again, this internal high is also that unfilled 50-minute. If we look back, you can see, oh wait, sorry, no, it's not. That was my mistake. But we get that unfilled 15-minute here. So now, right, price, we invert here, and then I'm in the entry off the close. So now we just let the trade play out. Okay, so we retrace into this fair value gap, this BPR. We get a very bullish reaction out of it. Amazing. So now my break even point. So this is another thing in the inversion fair value gap model. Once we make a new internal high, as you see here, now we made a new swing high, right? So right here. So this swing high, now once we re-hit this swing high, then we go break even, because now we made a new point of liquidity. So once we take out that internal high, then I go break even. So let's see. Okay, so now with this candle, I'm going to go break even there. Right now I'm going to target this high as my take profit. So let's see how price moves here. So gets very close to our break even, but I don't get hit by a break even there. And then I just want to target this internal high. And let's see, take profit hit, right? So this is the criteria for an A+ setup, right? If you want an A+ setup, this is the criteria that you need to meet in your trades. Obviously bias is in play, but bias is like withdrawal and liquidity, right? Here I'm bullish, we have withdrawals above. So yeah, so this is the A+ setup. basically an A setup would be like the lower in category you go, meaning the less of these 5 criteria that we have. So like an A setup might not have fair value gap delivery, or you might not have a liquidity sweep, right? So when you take out one of these, the rating goes down. So if I take out liquidity sweep, the setup will go to an A. If I take out liquidity sweep and for value gap delivery, then it goes to an A minus, right? You need to have like, you want to have all these criteria for the best case scenario, right? The best setups that you can take, right? If you don't have a good draw on liquidity, then what are you targeting, right? Right, price reaches up to liquidity and inefficiencies. If you're targeting something that's high resistant, like a high that took out another high or something like that, like a protected high, then it's not going to be as good. So yeah, in the next episode of my strategy playlist, I'm going to go over draw and liquidities, like really in depth for iFVG's, like how to get really high probable setups. So definitely be out on the look for that. Really good way to get A+ setups. But yeah, so this is the criteria. Make sure to note this down and practice back testing and look for these for value gap, for these inversion for value gaps. So yeah, I will see y'all later.